Mike Englund. He's the chief economist at Action Economics. And Mike, you're actually, not that far from the actual numbers. 480,000 jobs is what you predicted, but you also expected private employment to go up only by 80,000.
Yes, and in fact, so we find the payroll numbers perhaps a little less surprising than some in the private sector who tried to extrapolate the strength in the private jobs data for March and April. In general, if you look at most of the available May data, we have seen a new downdraft in the private sector, and some of the March and April statistics seem to suggest an overshoot of what's the trend in the economy. We did see high levels of claims. We have seen most of the factory sentiment numbers drop back. We've seen some weakness in some of those employment gauges. It could be the housing cycle is playing a bigger role in these numbers than it was before. We had realized that going to an April crescendo for housing. Since then, we've seen a pretty dramatic drop-off in MBA purchase index data. So when you look back at these employment numbers, the payroll numbers seem to be following that pattern. And I'd also point out the work week rose to 31.2 from 34.2 from 34.1.
Right.
And that uptick is actually driving the average weekly hours statistics. So we may find some of the other economic numbers for May are not going to get revised down in the market despite the payroll disappointment.
And that would be good news.
Yes, that's right. And also the factory statistics in this report, especially the hours worked for the factory sector, were quite strong. So it could be that factory output will stay strong, and a lot of the market tends to take its cue from the factory statistics.
Right. But, Mike, is this the time, though, where some of the optimists might come in and say, look, these numbers have been skewed by the census hiring. There's other, lots of noise, the homebuyers tax credit, and eventually this could get written off.
Well, I think it is the case that when the dust settles on the second quarter, we're going to get a GDP number probably in the 3.5 to 4 range, coming off the 3% in the first quarter. It's really splitting the difference between the V and the W expansion, and I think those looking for a V-shaped expansion and got some of the updraft from these last couple of monthly private employment numbers perhaps got a little head fake there. They're going to find we're really seeing a sluggish growth path for the economy. That might be a disappointment.
Okay. All right, Mike. Thanks so much for joining us and giving us your reaction. That was Mike Englund of Action Economics.